GH, Helen, and welcome everyone to Global Payroll Fest 2025. I'm Tom Viren, manager at JGA Recruitment. I'm delighted to be your host for the Ireland session, which is our next stop on the 24-hour global tour through the world of payroll. Ireland's payroll system may appear straightforward at first glance, but it definitely has its own set of rules, especially around real-time reporting, benefit-in-kind taxation, PRSI and statutory leave. Adding revenue audits and cross-border employment, is clear that managing payroll in Ireland requires both precision and up-to-date expertise. So we're honoured to be joined by Helen Dooley, Chief Commercial Officer at CR Payroll. Helen, I think it's fair to say you've got over 20 years of experience. And I know that you believe the power of business lies in the seamless integration of people, process, technology, and data, and coming together to drive meaningful solutions. So seeing this in action, where people remain at the heart of innovation and progress, is what drives your passion for creating lasting impact. So I know the dedication in understanding and addressing client concerns has been constant throughout your professional journey. And I know that you believe in the power of listening and the value of gaining different perspectives. So that's what we're hopefully going to cover today. And also, I know you're a passionate storyteller, and it's important in understanding others and delivering best outcomes. So thank you for joining us. Helen, can you just start by telling us a bit about your background and your experience in Irish payroll?
Well, Gia's Tom, agus go maigad. It's really great to be here today, and thanks for the beautiful opening in our native Gaelic, and also just for the overview. It's lovely. But I think, like many in our field, I didn't set out to become involved in payroll. It kind of found me. My adventure actually began in IT and business support, would you believe, where I developed a bit of a knack for solving complex problems through business engagement and kind of being the translator between all departments in businesses. So over the years, as you said, I found that effective payroll solutions aren't just about calculations and compliance and so on. It's more about understanding how people, process, technology, and of course data work together harmoniously. Now, what I suppose keeps me passionate about this work is seeing how organizations can transform when there are times when these elements can align properly. And the team and myself at CR Payroll, they always approach challenges by listening carefully. And that's to kind of understand the unique perspectiveness and the needs of all of the stakeholders and all the organizations involved. And we found over the years that this approach helps us craft solutions that do then genuinely make a difference for both, I suppose, the people and the business itself.
Thanks, Helen. I can't believe we was both in Dublin a few weeks ago,
Yes.
same event, and we didn't even say hello.
Exactly. Next time, Tom. Next time.
No, there was it finished a few hours early, and I wasn't stuck for things to do in Dublin, so tried some of the Guinness while I was there. So it was a nice trip nonetheless. But yeah, back to payroll. So today we'll obviously explore Ireland's payroll structure. I want to talk through some of the recent updates and common pitfalls, and then we're going to take everyone through a practical case study, and then we'll just finish with a Q&A session. So let's get started with your expert overview. Helen, back to you.
Perfect, Anne. Thank you so much. So let's dive into what makes Irish payroll unique. So we're going to tell a little bit of a story of Irish payroll, a journey through time. And today I'll take you through that journey through the fascinating evolution of Irish payroll. Now, this isn't just about numbers and regulations. It's about the story of how Ireland has transformed its approach to paying its workforce, the unique challenges that we faced, and where we're actually headed to next. So imagine, if you can, for a moment, the payroll is like the circulatory system of our economy, quietly working behind the scenes, keeping everything flowing. and typically largely unnoticed until something goes wrong, which is, I think, something that a lot of payrollers actually feel. And just like payrolls everywhere, our system has undergone significant transformation to meet modern needs. So again, as I said, it's the story. So chapter 1 would be the history. So from tax cards to technology, as we'll call it. So the story today begins in the 1960s when the PAYE was first actually introduced to Ireland. Now, back then, payroll professionals were more like mathematical wizards. They were calculating the taxes manually using tax deduction cards based on certificates of tax allowance. Now, can you imagine the precision and the patience required in those pre-computer days? Like one small miscalculation then will cascade into like significant errors for them. Now, for decades, Ireland did actually follow the same tax year as our neighbours across the Irish Sea, or across the pond, as we sometimes refer to it, running it from the 6th of April to the 5th of April. But Ireland decided to chart its own course. And the year 2001 marked a pivotal moment for Ireland. So we had a short tax year of just 38 weeks, and we transitioned to our now familiar calendar year system. Now, this actually happened alongside another monumental change. Why do one when you can do two? So, saying goodbye to the Irish punt and actually welcoming in the euro in 2002. Now, few transitions are as complex as moving an entire nation's tax system to a new calendar while simultaneously changing the currency. So then we move on to chapter 2, which is the bit of a revolution of PAYE modernisation. So in the early 2000s, we were about setting our own calendar, but in 2019, it was about bringing the Irish payroll firmly into digital age. So PAYE modernisation was nothing short of revolutionary. Now, there are some payrollers out there that have the pain, the scars, the bruises, and all to show for that time. It was difficult. It was done in a very short time frame, but it was worth it. Now, this wasn't just an upgrade, it was a complete transformation of how payroll data flows through the Irish economy. We all remember the alphabet soup of P30s, P45s, P46s, and the P60s, and those forms that caused so much paperwork and year-end scrambling. All of this was consigned to history. Instead, we moved to a real-time reporting system where every payroll event must be reported on or before the payment date using a payroll submission request. Now, every time an employee is paid, that information actually goes directly back to revenue. So this means that revenue now receives immediate visibility into payroll across the entire nation. Now, this transformation wasn't just purely about the technology. It was truly about the transparency, the accuracy, and the efficiency. We look at the old year-end payroll rush was a bit like preparing here in Ireland for an All-Ireland final every December, months of preparation, culminating in just one high-pressure event. But now with real-time reporting, it's a little bit more of a regular season of carefully managed matches. So onwards to chapter 3. What makes Irish payroll unique? Every single country has its quirks when it comes to payroll, and Ireland is no exception there. Our payroll framework stands on several pillars. The first that we look at is PAYE, as we've just mentioned, so pay as you earn. So this is the foundation of our system, where your income tax, your universal social charge, and your PRSI are deducted at source. So each element has its own unique calculation method. So for income tax, you're applied at standard, which is 20%, at higher, which is 40%, and these rates are based on individual circumstances. USC, or Universal Social Charge, has multiple bands with different rates, and that starts typically from 0.5% up to 8%. With PRSI, we've different classes based on employment type and earnings. We'll move then to the real-time reporting piece. So since PAYE modernisation, our system operates unparalleled immediacy. So employers report to revenue as the payments happen. It's not weeks later, it's not months later, it's as it's actually happening. So this ensures that it's accurate and timely tax collection, you've up-to-date employee tax records, typically, there's always exceptions, reduced administration burden at year end, and greater visibility for compliance purposes. So late payroll submissions to revenue are, you could kind of equate it to a little bit like missing the last train home. Technically possible to recover from, but guaranteed to cause headaches and potentially really expensive alternatives. Next, we'll move on to My Account and the Revenue Online System, so ROS. So these platforms have become central to Ireland's payroll ecosystem. So the employees actually manage their tax affairs through My Account, an online system. The employers submit payroll data through ROS, and then you have revenue payroll notifications are retrieved for each employee. Next, we'll move to Universal Social Charge, so USC as it's called. Introduced, unfortunately, during difficult economic times in 2011, it wasn't supposed to exist beyond that point. Unfortunately, this additional charge, like all things that we don't want, has actually become a permanent fixture in our tax landscape. Now, it is actually calculated on a different basis than income tax and has its own unique rates and bands, and I'll cover that kind of later on in our conversation, Tom. So then we have another pillar, which is your benefits in kind, or your BIC, or your BIK, depending on how you want to actually pronounce it. So Ireland maintains strict rules around non-cash benefits. So we'll take a few, like company cars. So the valuation is typically based on original market value and the CO2 emissions. From a health insurance perspective, taxable when paid by employers. And then we have preferential loans. So it's taxed based on the benefit of reduced interest rates. The sixth element is minimum entitlements. So this typically is with regard to Irish employment law governing critical areas such as statutory annual leave, which is your 20 days minimum in Ireland. Unfortunately, it's a little bit low. Recent introduction of statutory sick pay. We have maternity, paternity, and we have parents' leave provisions as well. The seventh pillar that we look at as well is the flexibility of the pay frequencies. So we typically are within Europe, it's a typical thing for monthly payroll, but Ireland embraces diverse payment schedules. We have weekly, fortnightly, monthly, and we accommodate them all. Now, this flexibility would allow employees to maintain, I suppose, a little bit of flexibility within their financial arrangements, so they're not waiting an entire month then for their payment. As with the final pillar then to look at from an Irish perspective is the transparency piece. And the PAYE system mandates that detailed pay slips that clearly show both what the employees earn and what's deducted are shown. Now, this transparency benefits everybody, typically. Again, there are exceptions to this. Employees understand their pay slip or their pay. That's if they actually look at it. And we all know in payroll that everybody looks at the bank account as opposed to the pay slip. But and employers then spend less time kind of explaining the calculations. Again, these are all typically what happens. We all know that there's exceptions to all of these rules. So chapter 4 is one that we look at key challenges within the Irish payroll system. Now, every good story has a drama, and Irish payroll is absolutely no exception to that. So here's what's making a few of the headlines or the core beliefs within our system and I suppose, the good, the bad, and the ugly. Real-time PAYE submissions. It all sounds wonderful. The pressure of real-time reporting actually means every payroll event must be reported on or before payment. Like late submissions, risk penalties or compliance reviews. The systems have to be robust and reliable, and corrections require really, really careful handling through payroll adjustment submissions. Now, payroll deadlines in Ireland are not suggestions, and the revenue remembers who is consistently late. They will never forget. We also have, I suppose, the correct application of tax credits, like a lot of countries. Revenue assigns those individual tax credits and the standard rate cut-off points. Using incorrect details can result in emergency tax, and emergency tax can really, really significantly impact an employee and their take-home pay. So therefore, regular RPN updates are truly, truly essential. From a BIK valuation, valuing benefits accurately really does require detailed knowledge. Your company CARBIC varies based on your business mileage, your OMV and your emissions. Your health insurance must be correctly grossed up. Your small benefit exemption must be correctly applied also. And moving on then to your PRSI classifications. So PRSI is charged to both the employer and the employee, and the different classes applied based on your contract type and your actual earnings. So Class A is the most common for employees, but incorrect classification can lead to underpayments and backdated liabilities. And just to note, from the 1st of October this year, the PRSI rates are set to increase slightly. So the employer PRSI rate will increase from 11.15% to 11.25% where the weekly income is more than €527. And if it is less than €527, the PRSI employer rate will increase from 8.9% to 9%. So something, Tom, to people to note. The employee PRSI rate will increase from 4.1% to 4.2%. And that's again from the 1st of October this year that those changes will come into play. Cross-border employees, the risk of remote or the rise of rather the remote working kind of has complicated payroll for many employees across the globe, and more so for the employers. So employees working from another EU country, they may trigger in Ireland A1 requirements. Tax residency and social security determinations truly are essential, and double taxation risks has to be carefully managed. So what we would equate as cross-border payroll is a bit like following a recipe instructions in multiple languages simultaneously. So a bit of the Irish thrown in, Tom, from earlier. And it's technically possible, but requiring expert navigation. So moving on then to small benefit exemption. So this actually, as of the 1st of January this year, a tax-free small benefit exemption was increased from €1,000 to €1,500 annually. And this gives employers a little bit more flexibility in providing tax-efficient benefits to their staff. Something that was introduced more recently as well, your statutory sick pay. So introduced in 2023, and there was an expectation of this gradually expanding to 10 days by 2026. It's currently at 5 days, and there was an expectation to increase it to 7 days in 2025. However, this is actually now on hold. So it is a matter of keeping an eye on the news and on the revenue site to see when these changes will be put in place. Now, when we do actually compare Ireland's provisions, they are relatively modest to, say, our neighbours, our EU neighbours like Poland or Hungary, unfortunately. So then we'll move on to parents' leave expansion. So family-friendly policies, they're continually being developed within Ireland. We're now up to 7 weeks per parent. It is paid by the state through the Department of Social Protection, and employers must manage, it's really important to manage the leave requests and maintain accurate records for those. Another an interesting topic, and always a topic at payroll conventions and gatherings, is gender pay gap reporting. Now, this relatively new requirement continues to evolve. Organisations must have report on their gender pay disparities. Plans have to be developed to address any of the gaps that are identified. And public scrutiny then of results really is increasing. Now, again, a recent update from this is that the Minister for Children, Disability and Equality, Norma Foley, actually announced in March that the new gender pay gap reporting portal will open in autumn 2025. So currently businesses with over 150 employees have to report it on their own websites, but this will mean that the results will have to be uploaded and will be available publicly through this portal. So as I said, currently the mandatory gender pay gap reporting, the legal requirement currently is for 150 or more employees, organizations with those to report. But in 2025, this threshold is actually going to drop to organizations with 50 or more employees. And also to note that the reporting deadline will be brought forward from originally December 2025 to November 2025. So currently, employers typically choose a date in June each year, and that's seen as their snapshot date for collecting the relevant data. And then it's 5 months from that date that they have to provide their gender pay gap report. So remember, that is changing. You're identifying in June, but you have to report it then by November. The next area, John, that we'll go through is the minimum wage increases. So it was at 12.70 per hour from 2024, and it was set at 13.50 since January 2025. Now, again, the living wage implementation was or is still targeting 14.75 by 2026. However, there has actually been a delay, and only in the last couple of weeks on this also, and it has been signalled by the Irish government that there will be change within this. Another area for change as well is, and everybody has been kind of wondering what this was going to look like, and that's pension auto enrolment. So it was set to commence in 2025. It's the My Future Fund, and it would automatically enrol employees aged between 23 to 60, earning over 20,000, who don't currently have pension coverage. So it was a three-way partnership, which was to include contributions from employers, employees, and also from the government. However, the timeline, and to use the words of the minister, is under active consideration. So Finance Minister Jack Chambers confirmed the commencement date will be adjusted only marginally, but that it would be likely to be a small number of months from after 30th of September. So very, very succinct information, very definite information for us all. So we're still a little bit in limbo with regard to kind of what that looks like, but it has been delayed. So again, another one to keep an eye on the revenue website to keep up to date on those. Speaking of revenue, they have actually shifted their attention around kind of a compliance with an increased focus on real-time data accuracy. So they are reviewing, they do a few more kind of frequent BIC audits, and there is definitely a greater scrutiny of contractor versus employee classifications also. Now, keeping up with Irish payroll changes is a bit like following fashion trends. Just when you think you've got it all figured out, the season changes and there is a whole new trend to follow. And there are a couple of areas there that I think some of them we're glad that they've been pushed out, but others it would be good to have more concrete details on them. Next, Tom, I'd like to move to chapter 5 of the Irish payroll story, and that's best practices for multinational employers. So for multinationals operating in Ireland, there are several best practices that stand out. So integration with RAWs, so technology integration is crucial. Ensure payroll software syncs with revenue online system, the automation of PSR submissions where possible, and validation of data before the submission, as always. So validating employee RPNs, never assume the tax credits are correct. Always request RPNs to be updated before the first payment. And please, 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 please encourage employees. We'll run through it in the case study, but please encourage employees to review their tax credits regularly. Again, through the My Account service, this is down to the employees to complete this step. Have processes also for managing emergency tax situations. So again, having a process in place, but ensuring it's one that actually will read through. Review your BIC policies annually or even on a more regular basis. So regular review of the company car schemes should be evaluated for tax efficiency. Healthcare benefits should be structured with tax implications in mind. And again, small benefit exemption should be strategically utilised. So managing, I think, multinational payroll compliance in Ireland is a bit like conducting an orchestra. Each instrument has its own part, but all of them must play together perfectly to create that pure payroll harmony. Please ensure you have a comprehensive payroll calendar. Timing is everything. So include your PSR deadlines for each pay period, schedule your monthly statement reviews, plan for year-end processes, and align with corporate accounting and reporting cycles. A lot of this best practice, very, very simple, very straightforward, but sometimes those small little changes or small little processes can be overlooked. Stay current on annual leave retirements and Irish statutory requirements. Ensure your HR and your payroll teams are aligned on current requirements, like build flexibility within your system to ensure that it can adapt to those changes, and then maintain clear documentation of all leave that is actually taken. So in conclusion, the payroll professional, as we call them, the unsung heroes. So as we conclude the adventure that I brought you through of Irish payroll, I hope you've enjoyed the story of it. It's to recognise the professionals who complete this complex work. Like the best sporting coaches, they work behind the scenes, ensuring everyone else can perform at their best. They navigate ever-changing regulatory landscapes, they balance compliance with efficiency, and they ensure Ireland's workforce gets paid accurately and on time. Through currency changes, calendar shifts, modernisation initiatives, and shall we mention the pandemic, they've all kept all of the systems running. For multinational organisations, finding the right balance between the global standardisation and Irish specific compliance really is key. And the companies that thrive are those that build the flexibility within their systems and processes that are capable of adapting to Ireland's unique and evolving payroll landscape. So just for anyone that may not actually process payroll, the next time that you receive your payslip or check your bank account on payday, spare a little thought for the payroll professionals who made it all happen. They are the unsung heroes of our economic story. And if payroll professionals were to get medals for avoiding catastrophes, they would definitely need reinforced trophy cabinets. But I still believe that probably still too modest to actually display them. So that's Irish. That's history and the story of Irish payroll, Tom.
Thank you, Helen. I did prepare everyone that it was going to be a story telling, but I feel like you should. I feel like you should publish that. That was great. That could definitely be made into a documentary. I feel it was great rolling through the years.
Rolling through the years, exactly.
Thanks, thanks for taking us through that. Yeah, I think particularly like the key challenges are always a good one, and like it's always great to know what makes Irish payroll unique. So thanks for reiterating that and presenting it in that storytelling way. So okay, so shall we move on to the case study
Yep.
now? So let's take a look at the case study. Helen, you're going to walk us through like how these issues play out in practice. So
Yeah.
for the case study today, we're looking at a fictional cloud solutions provider, Zenith Cloud. And to set the scene, Zenith Cloud, they're setting up a Dublin office with 16 employees. Helen, what we'd like you to do is to guide us through the challenges that they faced around Irish tax code, PRSI classifications, and employee benefit reporting. So I'm just going to share my screen, and this is where it all goes wrong. I think we're in. Are we in?
There we go.
Great.
Beautifully done. Beautifully transitioned, Tom. Brilliant stuff. And as you said, it is truly around, I suppose, a piece. It is a fictional company within Dublin, with 16 employees. But what we've done is we've ensured that, we've looked at the problems that in multinationals could find themselves in, reporting from PAYE, USC, or PRSI, and various employee classification requirements. It's constructed in a way that it'll offer value as it highlights issues that aren't, it's theoretical, but it's not really. It's practical challenges that maybe a lot of you might be facing right now or could encounter in the future, and using the phenomenal work the team do in CR Payroll as well to kind of highlight some of the areas and I suppose the key findings that you can have within these parameters. So by the end of the session, hopefully you'll have a clearer understanding of how these payroll challenges can affect your business, and more importantly, how to implement those effective solutions. So I didn't choose the name of the Zenith Cloud. It's a bit of a bit of a mouthful, but let's go. We'll dive into Zenith Cloud and how to tackling the payroll challenges head on. It's to ensure not only compliance, but also it is really important about employee satisfaction and succinct financial operations. So just quickly to run through again the Irish payroll landscape in terms of the understanding of it. So we have that PAYE model, which requires employers to deduct tax, universal social charge USC, and PRSI from employee wages at the time of payment. So again, remember the revenue commissioners or the revenue I've referenced them to date. They administer that through the PAYE modernisation framework that was introduced in 2019. And it requires employers to report the payroll information to revenue on or before each payday. So that creates opportunities for massive efficiency, but potential pitfalls as well for anyone that would be unprepared. So when you're looking at an Irish, a multinational company setting up in Ireland, there can be some factors that can complicate the payroll processing. It's the multi-layered tax structure, unlike some other countries with simpler tax frameworks. Irish employees are subject again to remember PAYE, USC at varying rates depending on income levels, and PRSI contributions, which have different classes based on employment types and earnings. You also have those statutory requirements, your benefit in kind or your BIC, the specific rules around calculating holiday pay under the Organisation of Working Time Act 1997. And then you have the statutory sick pay, which was introduced on the 1st of January 2023 through the Sick Leave Act of 2022. So thirdly, then there's the issue of kind of the ongoing compliance, like in most countries with consistently evolving legislation. Irish employment and tax laws undergo regular changes, so it really does require vigilance and adaptability. Now, we all know that the consequences of getting payroll wrong can be significant. It's obviously beyond the financial penalties. You have like the potential interest rates and revenue, you have the errors that can lead to decreased employee morale, you have damaged trust, you have administration burdens on payroll people that are already overworked. You even could have reputational damage if the issues become widespread or persistent. And that is not something in the context of Zenith Cloud, who are setting up in Dublin. So it's not good to have these challenges, and it's to ensure that solutions are implemented. So I'm going to run through a couple of them, Tom. Some of them listed there on the slide. So say for instance, the PPS numbers and the delays that could actually come into play with regard to those. So your PPS is your personal public service number. And as they've expanded their Dublin operations, they've recruited several international employees who didn't actually have PPS numbers upon starting their employment. Now, for those of you who wouldn't understand, so the PPS number is essentially Ireland's national identifier. It's similar to your social security number in the US or your national insurance number in the UK, and it's required for tax purposes, social welfare benefits, public services, and it's absolutely essential for proper payroll processing. So when Zenith Cloud's new employees started without PPS numbers, it triggered the application of emergency tax. Now, this is a situation that causes significant issues for both the company and for the new team members. Now, under emergency tax procedures, revenue requires the employers to apply a temporary taxation arrangement that typically results in higher tax deductions. So for Zenith Cloud's new hires, this meant substantial reduced take-home pay in those initial months. And this could be anything up to a deduction of 40% of their gross salary, plus your USC with no tax credits applied. So immediate problems that this creates. First, the employees experienced massive financial stress during their onboarding period. Imagine moving to a new country and now your pay has actually dramatically reduced, not the warm welcome that Zenith Crowd wanted to provide. Secondly, it's the administrative complexity. Corrective measures would need to be applied once the PPS numbers were actually assigned. And thirdly, as I said already, it's the damaged trust in the company's administration capabilities at a critical time. So it's like going, if they can't get it right first time, when will they get it right? So it's the new employees were forming their impression of the organization. So it's not good to start off from a deficit. So solutions, what could you do instead of stop yourself getting into this situation? So a proposed solution would involve creating a proactive onboarding system that addressed the PPS numbers before the employee's first day. Now, depending on where payroll sits in your organization, whether it is in finance or HR, this is a team effort. So this is gathering all of the people that would actually be involved in the onboarding process. So you're developing clear guidance documentation for international hires, explaining the PPS process and required documentation before they arrive in Ireland. You'd establish a partnership with maybe a local relocation service to assist employees with booking the PPSN appointments, which would then have which they typically have lengthy waiting periods for them. Implement a tracking system to monitor PPS applications and follow up appropriately. Again, this is a lot of legwork that is typically required by the employee to complete. And finally, then creating a clear communication template, explaining emergency tax, the effect it can have on employees, setting proper expectations as well, while emphasizing like the temporary nature of the situation. Typically, if you put these measures in place, we have seen and gone into companies, implemented these changes, and it has actually reduced emergency tax instances by 85% within 3 months. So dramatically improving the onboarding experience. The next section, Tom, I'll move to is the benefit in kind on company cars. It's always a topical one. So the challenge that Zenith Cloud faced involved the incorrect handling of benefit in kind or BIC on company cars provided to senior management. Now in Ireland, when an employer provides an employee with a non-cash benefit, such as a company car, the cash equivalent value of that benefit is generally taxable. So for company cars, BIC is calculated as a percentage of the original market value or the OMV of the vehicle, and is based on business mileage and emissions also. So they had assigned company cars to 4 senior managers, but hadn't properly accounted for BIC implications. Specifically, they would have failed to report the benefit value to revenue through payroll, withhold the appropriate PAYE, USC, and PRSI on the cash equivalent, and maintain proper records of business versus personal use. Now, the company mistakenly believes that because the cars were necessary for business purposes, they may be exempt from BIK. However, under Irish tax law, it's quite clear that personal use availability triggers BIC liability, and regardless of the business necessity. So this oversight would have created a significant compliance risk, and revenue audits frequently they do target BIC arrangements, and penalty for non-compliance can reach 100% of the tax that should have been paid plus interest. Now, a possible solution or a proposed solution could include a comprehensive review of all benefits provided to employees and not just the cars, not focusing on one. Implementation of proper BIC reporting through payroll, creation of a mileage tracking system to accurately determine the appropriate BIC percentage. Retroactive correction of previous filings is necessary, which would involve additional tax payments, but would have avoided potential penalties. And obviously then development of a BIC policy document clearly outlining employees' responsibility regarding those company vehicles. Now, for company vehicles specifically, calculation of the correct BIC values based on the original market value of the vehicle, the CO2 emissions category, and the business mileage, as we've previously said. This creates transparency for both the company and the employees about the tax implications of the benefit. And the corrections would result in some senior staff seeing reduced net pay initially, but proper communication about the legal requirements and the value of the benefit helped maintain morale during the transition. I'll move on now, Tom, to annual leave pay discrepancies. So it's the third challenge, involves these annual pay calculations for particularly employees with variable hours. Now, under the Organisation of Working Time Act, employees in Ireland are entitled to paid annual leave calculated as either 4 weeks, 1/3 of a working week per month worked, or 8% of hours worked in a leave year, and that's subject to a maximum of 4 working weeks. So for employees with regular hours, this calculation is completely straightforward. However, for those with variable hours, such as the part-time technical support team members that would have been working for Zenith Cloud, they had flexible schedules, so the calculation does actually become more complex. So the proper approach for variable workers is to calculate holiday pay based on the average weekly pay over the 13 weeks preceding the leave. So this should include regular wages, overtimes, commissions, and any bonuses. So Zenith Cloud had been calculating leave based solely on the employee's basic hourly rate multiplied by their contractual hours without actually factoring in the actual hours worked or additional payments received during the reference period. Now, this approach typically breaches WRC or Workplace Relations Commission rules and would have resulted in a systematic underpayment of holiday pay for the affected staff. And beyond the legal implications, this creates also a moral issue as employees would feel undervalued during their actual time off. So a solution proposed for this would be implementing a compliant leave calculation in the system that properly averaged the variable hours over the required reference period. Conducting a thorough audit of historical leave payments to ensure all employees affected are caught in the system. Processing back payment corrections for underpaid leave. In this scenario, we would have totaled over 4,000 across the affected employees, so quite significant. And then creating, again, we love a bit of documentation in CR, creating clear documentation that explains to both HR and the employees how holiday pay is actually calculated. And then obviously implementing quarterly or regular payroll audits to ensure that there is ongoing compliance for this. Now, this intervention, it wouldn't only address the legal compliance issue, but also significantly improve employee satisfaction, particularly among the part-time staff who would have been most affected by the previous approach. So next we'll move on to incorrect PRSI class application. So the final major challenge that Zenith faced involved the misclassification of employees under the PRSI system. So again, pay-related social insurance, known as PRSI in Ireland, is categorised into different classes, which determine both employer and employee contribution rates. So the classifications typically depend on factors including the nature of the employment, the earnings levels, and also the age of the employee. So they, unfortunately, not the employees, but Zenith Cloud had incorrectly classified several part-time employees under PRSI Class A, which it is typically the standard class for most employees, but they should have actually been under class J, which implies to employees earning less than 38 euros per week. So this misclassification had several implications. So under class A, both employer and employee contributions are higher than required. The incorrect deductions reduced employees' take-home pay unnecessarily. The company faced potential compliance issues with the Department of Social Protection, and future social welfare entitlements for these employees could actually be affected. So the error stemmed, unfortunately, from a payroll software issue configuration with Class A as the default for all employees. So without a proper review process for part-time staff whose hours and earnings would have fluctuated. So in this scenario, a proposed solution would be comprehensive audit of all employee and PRSI classifications, implementation of proper classification protocols based on weekly earnings thresholds, correction of historical misclassifications through the PRSI reconciliation process, setting up automated alerts within the payroll system if it's available to flag potential classification changes when an employee's hours or pay rate changes, and review regular reviews of PRIS classifications, especially for employees near threshold boundaries. And these changes would ensure that both the employer and the employee PRSI contributions were accurate going forward, and refunds were processed for excess contributions made previously, which again would have improved relations with the affected staff. It's key and important. So typically what we would look at next would be the implementation and the results, Tom. So having identified their payroll challenges, you develop a comprehensive implementation plan that address not just the immediate issues, but also establish those sustainable processes for the future would be key. It would be focusing, first of all, on correct the historical issues and the errors to avoid to achieve clean compliance, not avoiding compliance. Secondly, to establish those robust flexibility within the system to prevent the reoccurrence. And thirdly, to build internal capability, again, knowledge sharing, knowledge transfer, and also documentation. So really, really key in this. And then also what we would look at is, I suppose, key practices and takeaways for this. So again, it is about the creation of clear guidance for international employees before they arrive, build relationships with local supports, prepare employees for potential emergency tax situations, conduct some audits of all the benefits provided to employees, ensure the payroll system is correctly handling the variable work hours. Fourth, what we would look at is review classifications when employees change their hours or pay rates. Um, and again, just in conclusion with regard to this, there's a lot of scenarios that can come up. There is a lot of solutions that can be proposed for them. But the most important practice is conducting regular comprehensive payroll audits or process reviews. So recommendation would be quarterly internal reviews, annual external audit, if possible. That would possibly be at group level or higher level. But consistency with employee contracts is key. Compliance with current legislation, the accuracy of the calculations, I suppose, the correctness of tax and PRSI treatments. Um, the Irish payroll system is not static. It evolves with every budget, every legislative change, and staying informed through professional bodies, your revenue briefings, expert advisors really is essential for maintaining that compliance. And I suppose this Zenith case demonstrate that addressing payroll challenges proactively just doesn't avoid penalties. It improves your employee satisfaction. It reduces the administrative burden on an already busy payroll team, and it truly does create a foundation for sustainable growth. I hope that has covered all, Tom.
Thank you. I think you certainly covered a lot. And Zenith Cloud. Um, if,
They're a busy company.
if there anyone's there, reach out to Helen. Hopefully she can get it fixed for you. But no, thank you. So I think we've got a bit of time for some to just kind of cover some key questions that we've received from our global network. Um, for you, we'll just dive straight in
Yeah.
to that. So okay. Was first one has come in. What happens if you miss a payroll submission request deadline?
Ooh, a PSR deadline. Revenue may apply penalties is what may happen. Um, I suppose I love using an example. So if we imagine O'Connor's Bakery running their weekly payroll every Friday, their payroll administrator was ill, missed submitting the PSR by the required deadline, which remember is on or before the payment date. The consequences of that could be revenue could apply to, it could apply a fixed penalty of €4,000 for each breach. Um, then you have the interest may accrue on late payments. So the late payments of PAYE, PRSI, USC, and that's typically at 0.0219% to be specific on the percentage per day. The company's tax clearance status could actually be affected. And for persistent non-compliance, revenue might actually conduct a complete audit. So solution in that case would be O'Connor's should immediately submit the late PSR and ensure payment of taxes. Um, they should also contact revenue to explain the situation, maintain good communication if possible with revenue. And typically revenue will take a reasonable approach when genuine errors do occur, and that they are promptly rectified and notified to them.
Yeah, I know you touched on taxes a bit there. So like how can we avoid emergency tax on like new hires?
Okay, so who will I pick for this one? We'll go with Murphy Engineering. They're after hiring. I'm thinking of a friend, Siobhan, as a new payroll or as a new project manager, for instance. Um, obtain Siobhan's PPS number before her start date. Again, this is about working with different teams. Payroll can sit in so many different places. It's a huge conversation in itself. HR, finance, but this is a team approach to this. So it is whoever is responsible for communication with the employee PPS number before they start. A lot of I suppose the groundwork is really down to the employee. So they have to go through my account, transfer their tax credits from their old company to their new company. Murphy Engineering would then have to register Siobhan as an employee on the Ross service before her first pay date. Now, what's also really important is that Siobhan actually ends her employment with her previous employer on the revenue system. So that's the My Account. It's very simply done. It's an online system. It is fairly straightforward when you want to do something straightforward. And even if she is actually coming out of unemployment, it's really important that she should still access My Account to allocate her tax credits to the new job. So it's whether she's coming from unemployment or from another role that she does do that. And then a key one on this is that, again, the RPNs, emergency tax must be applied, which typically means taxing all of the income at the higher rate without personal credits. And you can imagine how painful that is for an employee. I think we all have probably come across that at one time or another, where emergency tax has been applied. I know back in the day when there was paper P45s, getting it to the new employer was painful. So emergency tax is just too painful all around.
Okay, thank you. Yeah, I think we've got time for a couple more questions. I suppose it probably wouldn't be right if we didn't cover benefits in kind and BIC. So, what's the best way to value a company car for BIC? I know you went through company cars and
Mm.
benefits in kinds earlier, but what's the best way for a company to value.
Okay, well, we'll go maybe with an example. Liam is a sales director in Galway Medical Supply, so he's on the road constantly. So in order to calculate that, so the original market value, or the OMV method, is generally the most straightforward approach to use. So you start with the original market value of the car, 35,000, we'll say, pulling figures from my head. You apply the annual BIC percentage based on the business mileage and the emissions. Then what you would do, so let's look at a typical executive with like he's not doing too much. It's 24,000 kilometers annually, maybe. The CO2 emissions are maybe 125 G per kilometer. The BIC rate, maybe 27% of the original market value. So you'd calculate it at 35,000 multiplied by 27%, which is giving you 9,450 annual BIC value. But then that monthly BIC value would be 787 euros and 50 cent, which is then added to Liam's taxable pay. One thing to note on this is that electrical vehicles receive preferential BIC treatment. So it can be 0% up to 50,000, and they're making them obviously highly tax efficient options for company cars.
Okay, thank you. I think we can do a quick fire one last question maybe, because I think this is a question that comes up quite a lot, and it was around like remote workers. So do remote workers in other EU countries still need to be in Irish payroll?
Okay. So I have a friend in Portugal, so we'll pretend that Tomás is working remotely from Portugal while he's maintaining his Irish employment contract. It's really, really complex. There are so many factors to consider when you're looking at this particular area. So you're looking at tax residency, for example. So if Tomás became tax resident in Portugal, he may be subject to Portuguese income tax, and that's creating a dual taxation scenario requiring attention to the Ireland-Portugal double taxation agreement. Another area is social insurance. So after 24 months, Tomás would typically move to the Portuguese social security system, unless there is the scenario that an A1 certificate extension is granted. You have permanent establishment risk. So having Tomás working from Portugal could create a permanent establishment for the company that he works for in Portugal. And then you have corporate tax implications there. Um, Irish payroll requirements, even with Portuguese tax residency, if the legal employer remains his Irish entity, then his Irish PAYE actually still must be operated, though tax relief may be available through double taxation agreements. I have to say on this one, Tom, best practice is actually to seek professional advice. This area, like when it involves multiple jurisdictions and regulatory frameworks, it really is best to seek advice because, again, there are so many different scenarios and regulations and frameworks for how different countries interact. So definitely best to seek professional advice on this one.
Okay, thank you. And Helen, thanks so much for like sharing all your expertise today. I think it's clear that Irish payroll is rich in complexity, especially when it comes to like real-time reporting, benefits, and especially like their like cross-border compliance. So
Mm.
to everyone joining us, thank you for being part of the Ireland session of Global Payfest 25. Whether you're already operating in Ireland or exploring the market, we hope today's session has given you a practical guidance and clarity. All sessions, including this one, will be available on demand after the event. So coming up next, I think we're heading to Sweden, where we'll uncover another layer of European payroll nuance with Go Global's Lisa McKay. Helen, any final thoughts from your side before we close?
Gur mai got Anish, Arish, Tom. I hope those listening have gained valuable insights. Just to take a moment to say for those who support payroll professionals, whether you're in leadership, your HR, finance, or even IT, there's one simple, powerful way that you can show gratification to your payrollers, and that's to give them the gift of time. Time to review, time to upskill, and most importantly, time to rest. Because even the most advanced systems, it's the human element that really drives excellence in payroll. At CR Payroll, we believe really in championing the people behind the payslip. Supporting payroll professionals is it's just as vital as implementing the right technology. And to all of you payrollers out there, this is the week for you. This is Global Payroll Week. You manage intricate legislation, tight deadlines, significant responsibilities, and all with unwavering precision. You are all the engines that keep organizations running smoothly and often without the fanfare. So take a moment to celebrate yourselves. You've truly earned it. And I suppose wishing everyone continued success on their payroll adventures. Thanks to you, Tom, Natalie, Nick, and all the team at JGA for asking us to support such a great initiative. And happy Global Payroll Week to everybody.
Certainly echo happy Global Payroll Week. And thank you, Helen, for your time, and thank you for the insights into Irish payroll. And thank you everyone for joining. We're going to jump over to Sweden, so see you in Sweden to chat about those all important work-life balance policies. Thank you everyone. Bye bye. Thanks, Helen.